Hello, good evening.
Good evening, sir.
Good evening, sir.
Great. So, Emmanuel Jamefi, can you pray for us so that we start this evening's lesson?
Okay, please. Let's pray. Father Lord, we thank you for this day. The day you begin with us and end with us successfully. Thank you. Amen.
Amen. Okay. So, this evening, we want to continue from where we left off Monday dawn. Anyone to remind us of what we discussed on Monday during our group discussion? Mawinam, would you want to do that?
Yes,
Okay, so let's hear from you.
okay. I remember we looked at um the old structure, and that is the old structure under the domestic tax revenue division. Under the old structure, we have the large taxpayer office, the medium taxpayer office, and then the small taxpayers office. But under the new structure, we have the large taxpayer office, area offices, and then the taxpayer service centers. I also remember we looked at dispute resolution, we looked at some rights of the taxpayer.
Okay,
And
thank
some many
you.
others.
Let me hear from Edwin.
Sorry.
Edwin, what did we discuss on Monday? Hello, Edwin. Okay, so let's go to Millimate. Hello, Millimate. Okay. Osei Tutu. Hello, Osei Tutu.
Yes, sir. Sorry, I'm driving home, so very
Oh, okay.
attention.
Okay, that's fine. Osei Tutu.
Yeah, hello. Hello, sir.
Yes, can you hear me?
Yeah, loud and clear.
Great. Just walk us through what we discussed on Monday.
Add-on.
Yes, please.
Okay. We did a presentation on the tax administration, those 4 topics, and then I remember all the 4 groups presented their work. Should I go into details as in what really went on?
Okay, that is what we discussed after the presentation. You know, after the presentation, we started with dispute resolution. That's the area I want you to concentrate on. Or you don't remember?
Yeah, something like that. Unfortunately, I think I felt back asleep.
Okay. Ramatu. Hello, Ramatu.
Hello, sir. Hello, sir.
Yes, I can hear you.
Yes,
What did
good
we look at
evening.
on Monday? Good evening.
Okay, I think one group made a presentation on the governing body, I think as part of their presentation of GRE, and as part of the transition, we said that currently the board of GRA is the apex of the governing body, and the Commissioner General follows, and he oversees the administrative activities of the GRA. And beneath him are 3 commissioners, and each of them supervises the 3 divisions, as in each division. And we have the domestic tax revenue division, we have the customs, and we have the support service division. And you came in to say that initially it was the domestic tax revenue was looking at the large tax as in taxes. And but it's still the same. But when it comes to the medium and small, there has been a change. That part I don't remember. So, but I remember you corrected that over there. So basically that is it. And I think we also learned about the tax base and tax forgot it.
I mean, that's a good attempt.
I'm in a car, so the concentration is low.
Yeah, I get it. That's a good attempt.
Yes.
Okay, so last week on Monday, we started looking at dispute resolution. Okay. We started looking at dispute resolution. So because some of us couldn't join, I want to quickly go over what we looked at on Monday. Now, we established the fact that taxpayers have the right to object to a tax decision that the Commissioner General serves on them. Okay? If the Commissioner General serves a taxpayer with a notice of assessment and the taxpayer is not happy with that notice of assessment, the taxpayer can object to that assessment. We went on to establish the fact that the taxpayer can only object to a tax decision. So whatever is not considered as a tax decision, the taxpayer cannot object to that. That is where we mentioned that a practice note, class ruling, and private ruling are all not tax decisions, and therefore the taxpayer cannot object to that. Very important. Okay. We also mentioned that when the taxpayer is served with a notice of assessment, the taxpayer has within 30 days to object to the tax decision from the 30 days from the date the taxpayer was notified. If the taxpayer fails to object within the 30 days, the taxpayer will lose the right to object. Okay. Now, if you decide to object to the tax decision, there are some things that you must do. What are those things? Your objection must be in writing. It cannot be verbal. It must be in writing. You must state the grounds on which you are objecting to the tax decision. Apart from that, if the issue that you are objecting to has to do with customs duty, you'll be required to pay 100% of that customs duty you are objecting to, in addition to any outstanding tax liability that you have. If it's another type of tax, okay, other than customs duty, then you'll be required to pay 30% of that amount you are disputing before the Commissioner General will listen to you. Okay? Very important. So, I want us to continue from section 42. Who is going to start for us? Irene, are you ready to read for us?
Yes, sir.
Okay, so read section 42 for us.
Okay. Objection to a tax decision. Subject to a tax law to the contrary, a person who is dissatisfied with a tax decision that directly affects that person may lodge an objection to the decision with the Commissioner General within 30 days of being notified of the tax decision.
Okay. I think I've mentioned that. So let's go to section 43.
Okay. Objection decision. After consideration of an objection, the Commissioner General may vary the tax decision in whole or in part or disallow the objection.
So
The
when you
Commissioner
write
General,
to the Commissioner General, okay, objecting to an issue, what are the possible outcomes? The possible outcome are these: that the Commissioner General would vary the tax decision in whole, okay, accept everything that you have said, or accept in part, or disallow the objection. Please continue.
the Commissioner General shall within 30 days of receipt of an
60
objection.
days.
Yeah.
Please check, it's 60
The
days.
Commissioner General shall within 60 days of receipt of an objection serve the objector with a notice of the decision, including the reasons for the decision. Should I continue?
Yes, please.
Where the Commissioner General does not serve the person with notice of the decision within 60 days, the person may, by notice in writing to the Commissioner General, elect to treat the Commissioner General as having made a decision to disallow the objection.
So what we are learning here is that when you write to the Commissioner General has within 60 days, okay, to respond to your objection. If you don't hear from the Commissioner General in 60 days, you should treat it that the Commissioner General has disallowed your objection, has thrown your objection away. Do you think this is fair?
No.
Is this fair?
No,
You
sir.
write to him, he will not respond. And he's telling you that if he doesn't respond within 60 days, you should assume that he has rejected your objection. Let me hear from you. Herbert, is it fair? Hello, Herbert. Emmanuel. Edwin.
No, sir. No, sir.
Okay. Emilia, is it fair? Okay.
So I went for.
Sorry about that. Okay,
Yes,
so
sir.
Irene, let's continue.
Okay. Appeal against objection decision. A person who is dissatisfied with the decision of the Commissioner General may appeal against the decision to the High Court within 30 days of the decision.
Okay. this particular provision has been amended, okay? It was amended with Act 1029 that introduced what we call the Independent Tax Appeals Board. In the past, if the Commissioner General responds to your objection letter and you are not happy, you proceed straight to court. Okay? You proceed straight to court. But now it is not so. If you are not happy with the decision of the Commissioner General, you go to a body known as the Independent Tax Appeals Board. Okay? They will look at your matter. If it has any merit, then a decision will be made. If still at that point you are not happy with the outcome of the ruling of the Independent Tax Appeals Board and you want to proceed to court, you can do so. So Irene, kindly take us through the Independent Tax Appeals Board.
Okay. Independent Tax Appeals Board. Act 1029 establishes an Independent Tax Appeals Board, whose functions, among others, are to hear and determine appeals against decisions of the Commissioner General with respect to objections to tax decisions under the RAA.
The RAA simply means Revenue Administration Act.
Revenue Administration Act 2016, Act 915, as amended. A person who is dissatisfied with a tax decision affecting him directly may object to the decision within 30 days of being notified of the tax decision. After consideration of the objection, the Revenue Administration Act directs the Commissioner General to vary the tax decision in whole or part or disallow the decision and respond to the objector, giving reasons within 60 days. However, where the Commissioner does not respond within 60 days, the taxpayer may treat the decision of the Commissioner General as unfavorable. Prior to the amendment, a person dissatisfied with the tax decision of the Commissioner General could only seek redress through the courts. Okay. ITAP. Say that's an abbreviation of something. We just passed it.
Independent Tax Appeals Board.
The Independent Tax Amendment Board has introduced. Appeals Board has been introduced as another layer in the tax dispute resolution process to provide an aggrieved taxpayer the right to be heard by it before seeking redress through the court system. The Act provides that a person who is dissatisfied with the decision of the Commissioner General may within 30 days appeal against the decision of the Independent Tax Appeals Board.
Excellent. So this is a highly examinable area that I want all of us on the call to take note of when it comes to the dispute resolution process. It has been examined a couple of times, okay? So you need to be conversant with it. They can give you a scenario and ask you to advise what the person should do. Okay, very important. Now, this Independent Tax Appeals Board, how is it constituted? Who are the people that make up the Independent Tax Appeals Board? Can I have another person read for us. Alberta, can you read the composition of the Independent Tax Appeals Board for us?
Okay. All right. Composition of the Appeals Board, Fourth Schedule of Act 915. The composition of Independent Tax Appeal Board is expected to instill taxpayer confidence and reduce the amount of litigation. Membership of Independent Tax Appeals Board is comprised of the following. A chairperson of not less than 10 years experience in tax practice, who is a lawyer of not less than 10 years standing at the Ghana Bar or a retired Superior Court judge. 2 retired officers of the Ghana Revenue Authority, not below the rank of Chief Revenue Officer, who qualify for appointment as a tax consultant. 2 other persons with the same qualification as the chairperson in A. 2 representatives of the Chartered Institute of Taxation, Ghana, nominated by the Institute, each of whom has not less than 10 years of tax practice. 2 representatives of the Institute of Chartered Accountants, Ghana, nominated by the Institute, each of whom has not less than 10 years of practice. 2 representatives from the private sector who are women.
Okay, so these are the people that form the board. Okay, you can be examined on this. Let me get you a past question on this for us to look at it. Let me check.
Hey, Kulu. Kulu. Hey, what did I teach you?
Just give me a minute. I'm looking for the question so that we can all look at it. Okay. This is March 2023. Please, can you see my screen?
Yes, please.
We are looking at the C part, question 1C. Emilia, can you read for us?
Yes, sir.
Okay.
A taxpayer is not satisfied with the Commissioner General's tax decision. Explain the procedure to be followed in objecting to the Commissioner General's tax decision. 10 marks.
Can we do it?
Whoa.
Can we?
Yeah.
We just discussed it.
Yes.
Yes.
10 marks. So let's start.
Okay.
Who
So,
would
when a
set the ball
taxpayer,
rolling?
yes, so when a taxpayer is giving a decision regarding his tax liability and he or she is displeased,
Okay.
within 30 days, the person can go to the Independent Tax Appeals Board to file his displeasure or his consent regarding the decision by the Commissioner General.
Okay.
So the board
I think you've jumped
I've
the
jumped.
steps by like 5 steps.
Hey,
Yes, a big
hi.
leap.
Yeah, you've gone to where the Commissioner General objected. But I think the objection to the tax decision is the first one.
Yes.
So let's take it one after the other.
So the taxpayer has received a letter from GRA
Okay.
on the tax
You have
decision.
received a notice of assessment
A notice of assessment.
and
Okay.
you are not happy about
You are
it.
not
What do you
happy.
do? What is the procedure you follow in objecting to that notice of assessment? Okay. I want you to take your time. You have all the steps. The first thing the taxpayer would have to do is to write to the Commissioner General.
Okay.
Okay, if you are not happy and you want to object, your objection should be in writing.
Okay.
Emilia, are we together?
Yes, please.
The objection should be in writing. Number 2, the taxpayer will have to provide the Commissioner General the grounds on which he or she is objecting to the tax decision. Please,
Please take the 2 again.
I'm saying that 1, the taxpayer would have to object to the tax decision in writing. Okay, so you write a letter to the Commissioner General indicating that you are objecting to the tax decision. In that letter, you have to state the grounds, the basis on which you are objecting to the tax decision.
Okay.
Please, do you get it?
Yes, sir.
The third thing is that the taxpayer will have to do this objection within 30 days from the day he or she was served with the notice of assessment. Meaning that if the taxpayer decides to wait and object after 30 days, it would not be valid. Emilia, are you with me?
Yes, sir.
Okay. The taxpayer will have to object to the notice of assessment or the tax decision within 30 days from the time he or she was served with the notice.
Okay.
Now, when you are objecting to a tax decision, the Commissioner General expects something from you. What is that? If what you are objecting to has to do with customs duty, then you will have to pay 100% of that amount together with any other outstanding tax liability. Okay? If it is not customs duty, but it relates, let's say, income tax, then the Commissioner General expects you to pay 30% of the tax in dispute, the tax you are objecting to. You have to pay 30% of that amount before he will listen to your case. Now, having fulfilled this part of the procedure, the Commissioner General has within 60 days to respond to your objection. And when he is responding, there are 3 possible outcomes. Either your objection is upheld in full, or in part, or he rejects it. These are the 3 possible outcomes. Okay. Now, 60 days has passed. If you don't hear from the Commissioner General, you should treat it that the Commissioner General has rejected your objection. At this point, if you are still not satisfied, you have the opportunity, okay, from that time, within 30 days again, to write to the Independent Tax Appeals Board, telling them that you had this issue, you wrote an objection letter, the Commissioner General did this, did that, you are not happy about it. So you are bringing this matter before them for them to take a second look at it. If the Independent Tax Appeals Board goes into the matter and they also give a ruling and the taxpayer is not happy, then at this point, the taxpayer can resort to the court. At least with all these things I've mentioned, you will get like more than 10 points, won't you?
Yes, sir. So I lost you when you were at point 4. I didn't hear you on point 4.
Hey, are you the only one who lost me or the whole class? So let's hear from others. I think those who heard me,
Okay.
if you can repeat that, I'll be very grateful.
Okay.
Or say today you are silent. What is it? Emmanuel Jinfi. Derek. Hello, Derek.
Yes, sir. I'm still at work. Oh, sorry.
You are still at work. Hello, Edwin. Edwin, walk me through the process. Very important. Is it that you don't understand what I'm saying or you can't hear me?
We can hear you.
I bet that today is like the class is quiet.
Why are we quiet, please? Or they are driving home.
These are the type of questions you would have.
Okay, so let me try.
Okay.
So it says a taxpayer has a right to object a tax decision, and there are procedures that one needs to follow. One wants to object, a tax person wants to object a tax decision. One, it says the person has the right to object the tax decision in 30 days from the date that a notice is served, notice of assessment is served.
Okay.
And then the objection shall be in writing.
Okay.
And in the writing, it has to state the grounds on which they are objecting to the tax decision.
Great.
And then if the person, if there's a customs duty the person has to pay, it has to be 100% payment has to be done.
Okay.
And if it's income tax, 30% has to be made
before the Commissioner General.
Before Commissioner General would take over, right? And then the Commissioner General, would tend to their matter. And they said the Commissioner General has 60 days to respond to the objection. And there are three possible outcomes. It can be the partial, full, or disallowed.
Partly,
Yeah,
both
allowed. Okay, completely, yeah. So if that is done, if you don't hear from him after 60 days, then it was disallowed.
Okay.
But after the response, if you are not okay with the Commissioner General's outcome, so you can go ahead to the independent
Tax
how do you
Appeals
call it?
Board.
Yeah, Tax Appeals Board. and then you take it from there too. So
Okay.
that's my thoughts on, yeah. The rest,
So,
I
Alberta,
didn't.
kindly read the examiner's suggested solution for the benefit of
Okay,
my colleagues.
okay, sure. Objection to an assessment, section 42 and 43 at 915 as amended. Objection to a tax decision, section 42 of Act 915. A person who is dissatisfied with a tax decision that directly affects that person may lodge an objection to the decision with the Commissioner General within 30 days of being notified of the tax decision.
Wait, I
An
think you
objection,
mentioned that in our answer, right?
yes, please.
Okay, continue.
An objection to a tax decision shall be in writing and state precisely the grounds upon which the objection is made.
We also mentioned that in our answer, right?
Yes, please.
Okay, please continue.
Okay. A person may, before the expiration of the period, apply in writing to the Commissioner General for an extension of time to file an objection
Great.
on grounds of absence from Ghana by the objector, sickness, or other reasonable cause.
Okay. I mentioned this, I think, on Monday,
Our first time, yeah.
that within the 30 days, the taxpayer who is not happy can apply for extension of time. Okay. Before the expiration of the 30 days, you can apply for extension of time to file your objection. Please continue.
When satisfied, there are reasonable grounds for the extension. The Commissioner General may grant the application for the extension and shall serve notice of the decision on the applicant. An objection against a tax decision shall not be entertained unless the person has, in the case of import duties and taxes, paid all outstanding taxes, including the full amount of the tax in dispute, and in the case of other taxes, paid all outstanding taxes, including 30% of the tax in dispute.
I think we also mentioned that, right?
Yes, please.
Okay, please continue.
The Commissioner General may, however, waive, vary, or suspend the payment above pending the determination of the objection or take any other action that the Commissioner General considers appropriate, including the deposit of security. Here, the Commissioner General shall consider the need to maintain integrity of the dispute resolution procedure and the need to protect government revenue and integrity of the tax system as a whole in exercising a discretion.
Okay, so what this provision is saying is that the Commissioner General can decide to waive the requirement of this 30% and 100%, okay? He can decide. But in doing that, the law is telling us that he has to make sure that the integrity of the system is not compromised. Okay, please continue. Alberta, please continue.
A tax decision, that is, the tax decision objected to, as may have been amended by an objection decision. Objection decision. After consideration of an objection, the Commissioner General may vary the tax decision in whole or in part or disallow the objection.
I think we mentioned that, right?
Yes, please.
Okay.
So, sir, do you have to bring the various sections, or
no,
you can
no,
just put
no.
all
If
together?
you know it, fine. If you don't know it, I mean, that's fine.
Oh, okay. The Commissioner General shall, within 60 days of receipt of an objection, serve the objector with notice of the decision, including the reasons for the decision. Where the Commissioner General does not serve the person with notice of the decision within 60 days, the person may, by notice in writing to the Commissioner General, elect to treat the Commissioner General as having made a decision to disallow the objection.
Okay, so from the marking scheme, if you make any 5 points, okay, you get your 10 marks, meaning a point will earn you 2 marks. A point will earn you 2 marks. Great. Let's look at this. Let's look at this other question. So we did this. Now there's another question here. This one too, we should be able to do it. Question 1C, 10 marks. Can you see my screen?
No, please.
You can't see my
You're not
screen.
sharing it.
Okay. Can you see now?
Yes.
Okay, so who is reading for us? Can Emilia read for us?
Yes, sir, please, I'm here.
Please read for us.
Explain 4 functions of the
No,
woman.
1C.
1C. Explain the following as used in tax administration: self-assessment, preemptive assessment, administrative assessment, tax audit assessment.
Great.
Yeah, I saw this.
Can we do it? Have we discussed them?
Yes, sir.
Yes, that we discussed, but me, I think I stopped on
So
this.
if you can go over, please.
I should go over.
You remember the and the tax audit assessment, the preemptive and administrative, I think.
But we've discussed it in class, though. Self-assessment, preemptive assessment, administrative assessment. This is the same as the Commissioner General's assessment. Okay.
Oh, okay.
Then tax audit assessment.
Sir,
So, sir,
sir,
Yes, so Millimate, let's hear from you. One of the things I would want you to do is to
I
always
was going
make
to
an
ask
attempt.
whether we have to.
Yes, Millimate.
Okay, I was going to ask whether we have to do it according to the order in which. Whether we're going to do it according to the order in which you have. Hello? Oh,
Yes,
my
I'm listening.
network.
So let's see the
I'm
suggested.
saying that I want to take the tax audit.
You want to take the tax audit? Please go ahead.
Yes, my network is so slow. It's lights off, so my router is off. My network is very slow, but let me try the tax audit.
Okay.
The tax audit assessment is an examination of the taxpayer's business record and his financial affairs. The purpose of it is GRA wants to ascertain whether the right amount of income, is being declared, and whether the right amount of tax is being calculated and paid, according to the tax law.
Okay. Okay. That's a good attempt.
I also want to try.
Please try.
Okay. The preemptive assessment, as the name implies, preemptive, that has to do with when the Commissioner General has maybe any suspicion that a company is, sorry. Hello?
Yes, I can hear you.
Yeah, yeah.
A company is about to fold up or go bankrupt or something. It can decide that the person should file the tax before the due date, before the expected time. So maybe there's this preemption. So if we use that, is before the expected time. So maybe there's a suspicion, there's a tip-off or something, it can ask you to file the tax before the period, the expected date. And maybe a try on the self-assessment. With the self-assessment, that one, the taxpayer himself or herself assesses himself based on the activities he or she does, then declare his tax liability and make payments according to that. So with that one, the Commissioner General is not involved in the assessment, unless maybe there's an issue and they need to make some adjustments before they'll come in.
Great.
So
Just read what you see
basically,
on your screen for us. This is the examiner's suggested solution. Can you see it?
Yes, sir. Okay. Self-assessment. This is a mode of assessment where the onus of determining a taxable person's tax liability and the payment of the tax thereby by that taxable person is on the taxpayer. That's installment payer.
So here, the onus of determining the tax liability lies on the taxpayer himself. Okay, please proceed.
Okay. Self-assessment regime is a type of assessment regime where a taxpayer is made responsible for accurately computing and reporting their tax liability. The taxpayers are required to estimate their taxable income and the tax thereon for the year of assessment. Taxpayers on self-assessment may file revision of their estimates and pay taxes in accordance with the Income Tax Act 2015 at 896 as amended.
Excellent. Let's read about preemptive assessment.
Okay. Preemptive assessment, where revenue is at risk and where the person has committed an offense under a tax law, the Commissioner General may make a preemptive assessment of tax payable or to become payable by a person under a tax law, file a tax return. That's the Commissioner General. Sir, this I can't see, but I'm using my phone, so unless you scroll up a bit for me. Okay. Thank you. A person becomes bankrupt, is wound up, or goes into liquidation, where the Commissioner General believes on reasonable grounds that the person is about to leave Ghana indefinitely, where the Commissioner General believes on reasonable grounds that the person is otherwise about to cease activity or business in Ghana, where the Commissioner General believes on reasonable grounds that the person has committed an offense under the tax law, where the Commissioner General otherwise considers it appropriate. The Commissioner General may, instead of making a preemptive assessment, accept from a person security for outstanding and future liabilities as the Commissioner General thinks appropriate. The Commissioner General shall use the best judgment and information reasonable available in making preemptive assessments or fixing the amount of security.
I'm sure this is very clear. Let's go to administrative assessment.
Okay. These are assessments carried out by the Commissioner General or designated officers of the Ghana Revenue Authority. It is sometimes referred to as government assessment. It may include provisional assessment, final assessment, preemptive assessment, adjusted assessment, other assessment, assessment of interest and penalties, and where self-assessment is adjusted.
Great. So you mentioned this, you explain, you get 2.5 marks. One of the things I will urge you to do is don't just mention the point. Try as much as possible to explain it. Okay. Where is this point? Okay. So there is this thing P. P. The P stands for point. Okay, you make your point. The first E stands for explanation. Then the last E stands for example. So when you make your point, what is the point? Administrative assessment. Explain it. You give example. You see that in the suggested solution, the examiner has provided you with examples of what? Administrative what? Assessment. And he mentioned provisional assessment, final assessment, preemptive assessment, adjusted assessment, and other forms of assessment. Okay. If you adopt this model, I think it will help you a lot. Okay. So,
Saima.
yes, please.
Okay. Does it mean that the administrative assessment, all the first one, second one, third one, they all fall under the administrative?
Okay, so if you look at what we read in the law, you would find in the law there are two main forms of assessment. And these are self-assessment and commissioner general assessment. Do you remember?
Yes, please.
These are the two main forms of assessment. We learned that under the commissioner general assessment, then this one will come. The preemptive will come. The adjusted will come. Okay.
Okay.
The provisional assessment will come. So indirectly, it's trying to give you the type of assessment the Commissioner General would give.
Okay.
Please, do you get it?
Yes, please.
Okay.
Yes, please.
Any other question?
Thank you.
Any other question? Okay. Then let's go back to our text. So we have exhausted the issue of dispute resolution. Okay. Dispute resolution. We also have sanctions for non-compliance. We talked about assessment and filing of tax returns. All
Hello,
tax
sir.
returns have
Hello,
due
sir.
date. Yes,
Hello, sir.
I can hear you. Please go ahead with your question.
Sir, please, my line was breaking, so I didn't get something right. At a point, you said the Commissioner General, within 60 days, will have to respond to the taxpayer. So if within 60 days the taxpayer doesn't receive any response from the Commissioner General, he should treat it as unfavorable or rejected. And you also made mention of the three possible outcomes. I didn't get that. Can you state those three possible outcomes for me? Sorry
What we
for
are
taking you
saying
back
is
there.
that when a taxpayer objects to a tax decision, okay, the Commissioner General has 60 days to respond to the taxpayer. And in responding to the taxpayer, there are three possible outcomes. One, the Commissioner General would say that, okay, taxpayer, when we looked into the matter, you have a genuine case. So your objection will be upheld in full. That is to say, all the things the taxpayer is seeking for, praying for, would be granted. Another option is that part of his request would be granted. The third possible outcome is that his entire request would be rejected. Please, do you understand?
Yes, sir. Thank you very much.
Okay. So we now want to look at sanctions for non-compliance. Filing of tax returns have due dates. So for example, when it comes to PAYE returns, pay as you earn, taxpayers are required to file that return on or before the 15th day of the following month. So, PAYE for the month of August is expected to be filed and paid on or before the 15th day of September 2024. If you fail to file by that date, there are sanctions. Okay, what are those sanctions? There are penalties and interest that you will pay if you don't comply. When it comes to VAT, the due date for filing of VAT returns is the last working day of the following month that the returns relate. So, if you have a VAT return that relates to the month of August, you have up to the last working day of the month of September to file that VAT returns. If you fail to file by the last working day of September, it will attract a penalty of 500 Ghana cedis just by missing the deadline. For any other day, okay, that the return remains unfiled, it attracts an additional penalty of 10 Ghana cedis. Please, are we together? Hello?
Yes, sir.
Today,
Hello,
the
sir.
class wants to turn me into a Liverpool supporter.
You never
Oh
walk
no, we
alone.
are with you. We are with you.
You never walk alone. We are with you.
Okay. I used to be a fan of Chelsea, but they did some things and I withdrew my support.
To where?
You want to know the new team?
Yes.
Oh, now I'm with the winning team, Man City.
Good for you.
Okay, so I was talking about VAT. When it comes to communication service tax, ST, CST, if you miss the deadline, you pay a penalty, I think, of 2,000 Ghana cedis. For every other day that the return remains unfiled, it attracts an additional penalty of
500.
500 Ghana cedis. Thank you. So, what we are learning is that if a taxpayer fails to comply with the deadline for filing of taxes, it comes with sanctions. Okay, so I need someone to read this for us. Sanctions for non-compliance. Who is reading for us? Preferably a male. Today, our ladies are really in charge. I need the guys to come on board. Derek, Edwin, Emmanuel Jamefi, Osei Tutu. Please come on board. Let's do this together. Hello, Derek.
Yes, sir.
Shall you read for us?
So sanctions for non-compliance. Penalty is a compliance to or measure that the law imposed for breach of the provision of the tax law. It ensures that taxpayers comply with the responsibilities imposed on them under the tax law. Penalties come in the form of peculiarly, help me with the word,
Yes,
pecuniary or conviction. Interest is normally imposed or calculated for non-payment of tax or short payments of the tax as and when they become due.
Okay. So what are some of the sanctions? You know, we mentioned self-assessment. Derek, do you remember?
Yes.
Hello, Derek.
Yes, sir.
Good. So there is a particular sanction connected to self-assessment. When under the self-assessment regime, the law makes provision for a 10% margin of error. That is to say, at the end of the year, the tax you pay, okay, only makes provision for 10% margin of error. If we calculate and the margin of error is more than 10%, it means you didn't do your work well and will charge you interest for underestimation of tax payable. So let's read section 70 of Act 915. Where an estimate or revised estimate of tax payable by taxpayer with respect to chargeable income tax for a year of assessment, that is self-assessment, is less than 90% of the correct amount, the amount of interest the taxpayer is required to pay for each period is calculated as 125% of the statutory rate compounded monthly applied to the difference between the 90% of the total amount that would have been paid by way of installment during the year of assessment to the start of the period had the estimate of the person equal the correct amount. The amount of income tax paid by installment during the year of assessment to the start of the period. So if at the end of the period we realize that there was any difference, that difference that arose, you are going to pay interest on that particular amount. And the interest is computed as 125% of the statutory rate compounded monthly. You can have this as a computational question. We'll solve a computational question on this. Okay. So that's interest for underestimating income tax payable. There is also interest for failing to pay tax. Okay. If you fail to pay tax, it attracts what? Interest. We have various kinds of penalties. if you don't maintain proper documentation, there's a penalty for that. There's penalty for failing to file tax return. There's penalty for making false or misleading statements. There's penalty for unauthorized attempt to collect tax. And there's penalty for aiding and abetting. Okay?
Sir, please, which one is the penalty for unauthorized attempt to collect tax?
Okay. Hold on. Let me see if I can section
74.
75. Let me make reference to the act so that we can read together. Section 75, right?
Yes, sir.
Section 75. Okay, so let's see what is there. Emilia, you can read for us.
Yes, sir. Penalty for unauthorized attempts to collect tax. Section 75. 1. A person who, without authorization, collects or attempts to collect an amount of tax payable under a tax law or an amount that the person described as tax is liable to pay the following penalty. A, where the collection or attempt is made knowingly or
Okay, so let's
recklessly.
explain this. A person who, without authorization, you see, GRA officers who come around to undertake a debt collection exercise, you know, they come and they identify themselves.
Yes.
Okay, you see them in their jacket, you see them with their ID cards around their neck, sometimes with introductory letters.
Yes.
So if someone claims he's collecting tax and he doesn't have any authorization, there's a penalty.
To the person or to you, the taxpayer?
To the person.
Okay.
To the person. Please, do you understand?
Yes, sir.
Okay. So let's continue with what we're looking at. So these are the penalties, okay? And we have various kinds of offenses. Various kinds of offenses. This one, I don't intend to go into them. You just need to know that there's offense for failing to register. There's, if you fail to pay your tax, it's an offense, okay? It's not an area I've seen the examiner really go deep into. Just know that there are sanctions for non-compliance under the law. The next thing I want us to look at, I call it administrative directives. Okay? Administrative directives. Was it Monday? I showed you how a tax practice, a practice note looks like. I showed you a copy of a private ruling and a class ruling. That's what we are going to look at now. Anytime the Commissioner General noticed that there's a particular provision of the law that it is not too clear, okay, for tax administrators, for tax practitioners, or for taxpayers in general, what the Commissioner General does is that the Commissioner General will put a document together, and that document is what we call practice note. And this practice note will seek to throw more light on that particular provision of the law, okay, explaining the law, telling the general public how that particular provision should be applied. Please, do you understand? And in most cases, the practice note issued by the Commissioner General is binding on the Commissioner General, but not on the taxpayer. The taxpayer can decide to disregard the practice note. So can somebody read practice note for us? Alberta, if you can read for us, we'll be happy.
Okay, sir. Administrative Directive, Practice Note, Section 100 of Act 915. To achieve consistency in the administration of tax laws and to provide guidance to persons affected by the tax law, including tax officers, the Commissioner General may issue practice notes setting out the interpretation placed on provisions of the tax law by the Commissioner General.
So, in simple terms, the practice note is the Commissioner General's interpretation of specific provisions of the law. Please, do you understand? Hello?
Yes, we are here,
Yes,
sir.
please.
Okay. The practice note is the Commissioner General's interpretation of certain provisions of the tax law. Please continue.
A practice note may pertain to a single tax law or multiple tax laws, and the Commissioner General may issue multiple practice notes with respect to the same tax law.
Okay.
A practice note is binding on the Commissioner General until revoked. A practice note is not binding on persons affected by a tax law.
Okay. So,
Issue of
please continue.
Issue of practice notes, Section 101 of Act 915. The Commissioner General may issue a practice note by publishing the notice of the practice notes in the Gazette, on the website of the authority, and in at least 2 daily newspapers of national circulation. A practice note shall have a number and a subject heading by which the practice note can be identified. A practice note applies from the date specified in the notice, and if no date is specified, from the date of publication in the Gazette.
Okay.
The Commissioner General shall make
I'm trying
practice
to
notes publicly
show you
available.
one where all these features we are reading about can be found. So just give me a minute. Let me see if I can get this for you. Practice notes. Let's see. Yeah. Please, can you see my screen? Hello? Can you see my?
Yes, please.
So you see the practice
Yes,
note
sir.
has a number. You can see it has a number. It has the date of issue. Okay. Now let's go back to what we're reading. Alberta, please read again.
So I can't see your screen. Okay, I can now see your screen.
Okay, hold on.
Oh, it's gone also.
Can you see now?
Yes, please. Okay. Please, should I read?
Yes. A practice note shall
Okay.
have a number. Did we see the number?
Yes, please.
Subject heading. Did we see a subject heading?
Yes, please.
Okay, please continue.
A practice note applies from the date specified in the notice, and if no date is specified, from the date of publication in the Gazette.
Okay.
The Commissioner General shall make practice notes publicly available.
Publicly what? Available.
Available.
When practice notes are issued, it could be amended or it could be revoked. That is what section 102 is talking about, okay? A practice note can be amended or it can be revoked. Now, let's look at private or class ruling. Private or class ruling. Collins, you are welcome.
Thank you, sir. Good evening.
Good evening. The ladies have been holding the fort, so if you have come, please take your rightful position and read private or class ruling for us. Hello, Collins. Okay. Subject to section 104, refusing application for private or class ruling, the Commissioner General may, on an application in writing by a person, issue to that person a private or class ruling, setting out the position of the Commissioner General regarding the application of a tax law with respect to an arrangement proposed or entered into. In the case of a private ruling by the person, or in the case of class ruling by persons in the same class. Now, a private ruling, let's establish the distinction between the two. Anybody to attempt it, Collins? What is the distinction between private ruling and class ruling?
The private class, hey, please, sir.
Hello, Collins. Your line is breaking.
Hello, sir.
Yes, your line is breaking. I
That
didn't
means I
hear.
didn't really get the reading. Oh.
You said?
I said I didn't get the reading, so I'm reading it myself.
Okay, you go ahead and read it.
I should read it. Okay.
Yes.
Private or class ruling. The Commissioner General may, on an application in writing by a person, issue to that person a private ruling or a class ruling, setting out the position of the Commissioner General regarding the application of a tax law with respect to an arrangement proposed or entered into. In the case of private ruling by the person or
You see that private ruling, you see the person, specific. But in the case of class ruling, you say by the persons.
Okay.
Okay, so you can see the distinction.
Yes, sir.
Okay. Private ruling is one taxpayer. And that taxpayer could be an individual or an entity. In the case of class ruling, it is persons. Okay, association. Let's say association of travel and tour operators or something. That is what? A class. Please continue.
Okay. A private or class ruling may apply to multiple arrangements and multiple tax laws. Subject to the below, a private or class ruling is binding on the Commissioner General with respect to the application of a tax law mentioned in the ruling to an arrangement of the applicant in the case of private ruling and a person in the specified class in the case of a class ruling.
Okay.
A private or class ruling is binding only if prior to the issuance
Prior to the issuance.
prior to the issuance of the ruling, the applicant makes a full and true disclosure of all aspects of the arrangement relevant to the ruling to the Commissioner General, and the arrangement proceeds in all material respects as described in the application for the ruling. If the ruling is headed private ruling or class ruling, as the case requires, and for the period specified in ruling, a
What we are
private or
saying
class
here
ruling.
is that if you apply to the Commissioner General for a private ruling, you are expected to make a full disclosure of the transaction you intend to enter into or have entered into. Okay? You must make a true disclosure. But if the Commissioner General discovers that you've not made a full disclosure or a true disclosure, they can decide not to respond to you. Colin, do you understand?
Yes, sir. Yes, please.
Okay. So let's go to a private or class ruling does not bind, blah, blah, blah. Okay, I think that's fine. Let me quickly look for some questions on private and class ruling. Then we can discuss it. We can discuss those questions. Okay. Wow. This is interesting. Can you see question 1C again? It appears this is the favorite of the examiner. Emilia,
Yes,
can
so
you read question 1C for us?
Yes, sir. The Commissioner General assessed Judah in the 2020 year of assessment, and he is dissatisfied with the assessment. Judah intends to seek redress with the Commissioner General. He has contacted me for professional advice on objection process. Explain the objection process as contained in the Revenue Administration Act 2016 Act 915 as amended.
10 marks again.
This one, This one there I can do.
I said this one I can do. So you can see that this is
Yes.
the favorite of the examiner.
Yes.
You would really help yourself if you master this area very well.
Oh,
A
this one
word,
get 10 marks. Free.
This one there we can do a better.
Oh, we can do this one there.
Can do.
are you
Yes.
sure?
Yes.
Oh, yeah.
Okay, let's see this one too.
Okay.
This few days, see the areas we have covered under Revenue Administration Act. Look at this. In circumstances specified in Section 28, subsection 3 of the Revenue Administration Act 2016, Act 915, the Commissioner General may make a preemptive assessment of tax payable or to become payable by a person under a tax law, whether or not the person is required to file returns. Under what circumstances would the Commissioner General make a preemptive assessment? 5 marks. This one is full chop.
Yes. When the person wants
Oh,
to
where's
see the
your
country,
betting? Yeah,
definitely.
Can you have 50 marks? Ready at one touch.
Yeah.
This one is one touch.
The
Yeah.
professor is coming.
Okay. State two advantages of each of self-assessment to the government and the taxpayer. Okay. Talking about the advantages of self-assessment. Let's look at another one. 2022. 2022. Okay, this is what I spoke about, the computational part of self-assessment. Who is reading for us? 1C. We are yet to do the computational bits. At this time, it's just a theory. Who is reading question 1C for us?
Hello, Ari.
Okay, go ahead.
You have been offered an appointment by Bumu Manufacturing Company, a tax manager responsible for preparing and filing tax returns on behalf of the company. BMC files its returns with the Owusu Medium Taxpayers Office of the Ghana Revenue Authority. The company's tax identification number is. The company prepares accounts to 31st December each year. BMC estimated its chargeable income for 2019 year of assessment as 3 million Ghana cedi. Subsequently, the company secured a government contract and anticipated in the third quarter that its chargeable income would be 4.5 million. Additional information: tax paid on accounts, first quarter, second quarter, third quarter. Required: compute the tax payable for BMC for each quarter.
This one, we've not done it. So, but I'm just showing you that under self-assessment, okay, you could have some calculations to do. And this is a typical one. Okay. Let's take another question. This is another one. Still on underestimation of tax, question 1C. Okay. Meaning by this telling all of you in the class to kindly visit the website of ICA, download all the past questions and start going through them. They are very important. Okay, let's see another one. Emilia, can you read question 1C and D for us? Question 1C and D.
Okay, sir. The Commissioner General may, in the circumstances specified in Section 28, subsection 3 of the Revenue Administration Act 2016, Act 915, make a preemptive assessment of tax payable or to become payable by a person under a tax law, whether or not the person is required to file a tax return. Under what circumstances will the Commissioner General make a preemptive assessment? D.
So, from all the things we have seen in the past questions, about 5 of them, there are some areas you must master. GRA and the structure, you must master it. Identification of taxpayers and their tax base, you must master it. Assessment and filing of tax returns, we have discussed it, you must master it. Payment and recovery of taxes, that is the last thing I will do under tax administration, and we are done. Okay, we are here to talk about payment and recovery of taxes.
Okay.
Okay, we have, yes. We have talked about dispute resolution. We have talked about administrative directives, that is practice note, private ruling, class ruling. Now look at this question. Where the Commissioner General makes an assessment under a tax law, the Commissioner General shall serve a written notice of the assessment on the taxpayer. State 8 elements contained in the Commissioner General's notice of assessment. 5 marks. Can we do it?
Yes.
Okay. Because we have discussed all of them.
Your name, your turn.
Very, very important. So I think that is my target for today. I have achieved my objective for the day. If there is no question, then we would end today's session. We'll meet on Saturday at 6 p.m. We'll do payment and recovery of taxes. And possibly, I want to defer the computational bit to like next 2 weeks or something, where we'll start with employment, income, partnership, and all those things. For now, you need to get your basis right before we start with the computation. Any question? Any question? Hello? Any question? Yes.
Yes.
Question.
We'll go through the notes, and then if there are questions, maybe when next we meet, we ask before we start.
Okay. Just hold on. I want to quickly mention something before we go off. It just occurred to me that it's very important I address this now. Section 18. Okay. Let me just do this and we close. as a student of tax, you need to understand what year of assessment and basis period is. Okay. So, Emilia, if you can read for us.
Okay. Year of assessment and basis period. The year of assessment for a person is the calendar year, January to December.
If we say calendar year, it's January to December.
December.
Okay.
The basis period of a person is, in the case of an individual or a partnership, the calendar year. And in the case of a company or a trust, the accounting year of the company or the trust.
I want you to, this thing you are reading, very important.
Yes.
Very important. You can have a theory question on it or a computational question. So I repeat, the year of assessment for a person. Who is a person?
An individual or an entity.
Good. When we talk of an entity, we are referring to a company, a trust, okay, partnership, or an external company known as permanent establishment. These are examples of what? An entity. So we are saying that for year of assessment, it is the calendar year from January to what? December. But when it comes to basis period, the basis period of an individual might differ from that of an entity. What is the basis period of an individual? The basis period of an individual or partnership, okay, is also what? The calendar year. I repeat, the basis period of an individual or a partnership is what? The calendar year. But when it comes to the basis period of a company or a trust, it is the accounting year. The accounting year can also be January to December. It can be from March to February. Do you understand?
Yes.
This thing is very important. So, Irene, please read it again. I said Irene. Emilia, please read it again for us.
The year of assessment for a person is the calendar year. The basis period of a person in the case of an individual or a partnership is the calendar year. And in the case of a company or a trust, the accounting year of the company or trust.
3. Subsection 3. Can you see that?
Yes.
Read that for us.
Okay, sir. The Commissioner General may, on application by a trust or a company, approve a change of the accounting year of the trust or company on the terms and conditions that the Commissioner General may approve. The Commissioner General may revoke an approval granted under subsection 3 if the trust or company fails to comply with the condition attached to the approval. 5. A change in the accounting year of a trust or company alters the time at which the trust or company is required to pay tax by installments or on assessment under Part 8.
Okay. So
Hey, Collins.
what we are saying here is that a company or trust can write to the Commissioner General and apply for the accounting year to be changed. So if the Commissioner General looks at it and thinks it's okay, she would grant approval. If she looks at it and she is not fine with it, she would not grant the approval. If you are giving the approval and you don't follow the conditions, she can revoke that approval. Now let's look at method of accounting.
Okay, so
Please go ahead
well,
with your question.
yeah, okay. So before you continue, the basics period and the accounting year, what's the difference?
You said basis what? Your question again.
What we just read, the difference
Yes.
between the two, the basics period and accounting.
But it
The
was
accounting,
clear, or you didn't see it?
they look like they are the same.
Eh. Who agrees with him? Who agrees with him?
So I agree.
That they are the same.
But in a different context.
Okay, so let's hear from you.
So when you come to the taxman will see your account year as the basis period. It's the taxman's language. And when you go to the accountant will tell you it's my accounting year.
Okay.
So I think it's just it's a language for the two professions.
Okay. So the year of assessment, okay, that's what we started with. So let's take it from there. I like to take things step by step. It's simply referring to the calendar year.
Yeah.
Who asked the question?
So me,
Derek, okay. So the year of assessment is referring to the calendar year by default, January to December. When it comes to the basis period, we are looking at the period for which the person, okay, accounts for their income and expenses. And here, they are not the same because if the person is a company or a trust, okay, they can have a different accounting year, which is different from the calendar year. Derek, I don't know if you are getting my point.
yes, sir, I get it.
Do you get it?
Yes, sir.
For example, most multinationals that we have in Ghana, their accounting year is often not January to December, because maybe your parent company is based in South Africa. Their accounting year is different from the kind of system we practice in Ghana. Okay. So take it from this perspective that the basis period is more or less talking about the accounting year of the company. But for an individual or a partnership, by default, your accounting year is the same as the accounting year for Government of Ghana. Do you get it? Government of Ghana, our accounting year is January to December. Hello, Derek.
Yes, sir. Yes, it's understood.
Okay.
Sir, Zema,
Yes, please.
if I like to ask a question, let's take it that I registered my business in
Okay.
March 2023,
Okay.
and I'm due to file my return, maybe for the period for the year.
Okay.
Will I be using an accountant? Let me say, what did we say? Will I be using the basis period or the year of assessment
as in the calendar year. Because right now, maybe if I'm making my assessment, because I started from January, I'm reporting from, I started from March, I'm reporting from March to the next year, February.
Okay. So if you register a business and that business is a sole proprietorship, are you with me?
Yes, sir.
Good. It's a sole proprietorship. Then by default, your basis period would end 31st of December.
Okay.
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 If it is an individual in business, the same as sole proprietorship. If the business you have registered is a partnership, and you even registered the partnership in November, by default, your basis period is supposed to end 31st of December.
Okay.
Okay. But for companies have the option to choose their own accounting year. It can be January to December. Okay. It can be February to January, whichever one is convenient for them.
Okay.
That is why the law says that the date for filing of annual returns is 4 months after the end of the basis period.
Okay.
Though for companies whose basis period ends in December, they are required to file their tax returns by the 30th of April.
Okay.
You get it? But if
Yes,
your
sir.
basis period does not end on 31st of December, then that 30th April filing of tax return is not applicable to you.
Okay.
Did you get it?
Yes, sir. I'm okay now. Thank you.
You're welcome.
So if that it doesn't apply to you, then what other basis do they use? If your year of assessment is not the calendar year or your basis period is something.
Okay, so let me repeat myself. If you are an individual, okay, and you register a business on, let's say, 1st of December, your basis period would end on 31st of December, meaning that by the 30th of April, the following year, you'll be required to file your returns with the Commissioner General for that short period you were in business. Please, do you understand?
Yes. But what if you registered it in the middle of the year? Does it apply to you?
If you registered in the middle of the year, you will
It's like
still,
June.
your basis period will end 31st of December. Okay. The time you registered is immaterial. Once you are an individual, your basis period will always end 31st of December.
Oh, okay.
Okay, it is from January to December.
Okay.
Do you get it? We even have companies who choose their basis period to be January to December. And the company is registered, let's say, around June. Let's say 1st of July. Meaning that for their first year, they will be in operation for 6 months. Alberta, please, do you understand? Hello?
Yes, I understand. Sir, please, yes.
Okay. So that is it for today. I wanted us to...
And then you didn't comment on that of the company and entity. Trust, sorry, company or trust.
Yes, for company or trust, it is their accounting year that is used as their basis period. Do you get
So
it?
there's no specific time for filing your
Oh,
returns.
if you say there's no specific time, there is. The specific time is 4 months after the end of their basis period. Do you get it?
Yes, please.
4 months after the end of the basis period. So if your basis period is from June, okay, from June to May, the following year, it means that your financial year would end 31st of May. So 4 months after that, you are expected to file your returns with the Commissioner General. You see how we are
Okay,
struggling
sir.
to understand this? It's all because of this concept of year of assessment and basis period. Somebody is asking a question. Please go ahead. Who is asking the question? Hello.
Then we would appreciate if maybe we have a question, a practical question, then we go through.
Sure. Especially when we start with employment income, you would appreciate this
Okay.
thing better.
Okay.
Okay. You will see that the person started employment from 1st of August. Okay. And 1 year would be the following year, July. Okay. But in terms of accounting for the person's income for tax purposes, it must fit into the calendar year. When we pick a question on employment income, you would appreciate it better. Maybe by next week or next 2 weeks, we'll start employment income. Any other question? Hello, Irene. You've been quiet today.
See, I'm fine. I'm following with keen interest.
Okay, Sylvia.
Hey, please, I'm here. I'm okay. I'm following.
Okay, Emmanuel Jamefi, are you still driving?
I just got home.
You said?
I just got home.
You just got home. Okay.
Yes.
So I think this is where we'll end today's class. On the Saturday, we'll look at payment and recovery of taxes. Then we'll do a complete recap of all the things we have discussed under tax administration, just to make sure we have a firm grasp of the key areas under tax administration. Then we can move to the other areas. So if we don't have any question, we can have Collins pray with us and we'll end this evening session.
Okay, sir. Please, any question?
Your friends are tired, so they want you to pray so that they go and rest.
Okay, sir. Please, let's pray. Our Heavenly Father, the sovereign over the universe, we thank you very much for granting us life and for giving us this day to come and meet together as a class so that we expand our knowledge on the journey ahead in front of us. We ask that whatever we have learned and whatever we'll continue to learn, you grant us your spirit so that we're able to understand whatever we are learning and we're able to remember on the day of the account. We also thank for the opportunity you have given to us to meet together once again. Also, we are sinners and we individually fall short of your glory. And for this reason, we come in front of you asking for forgiveness of sin. Through your Son, Christ Jesus, we pray. Amen.
Amen. Thank you very much for your time. We'll meet again on Saturday at 6 p.m. Be getting ready. Once we finish tax admin, you will take a quiz, okay, on all that we have discussed. Thank you.
Okay, sir.
And good night.
Okay, sir. Thank you too.